All right, guys, if you're just tuning in, let me go ahead and go live here on my Instagram. We'll get started in just a second here. Thank you guys for joining, by the way. If you're on Facebook, make sure you share the screen. I'm just going to get things up and running here on Insta, and we'll get things rolling tonight. All right, guys. So real quick, we're on Facebook, we're on Instagram. I just want to test my audio and my video and make sure everything is good. If you can see this, drop in the comments. Make sure you like, share, and subscribe. This is a really important video that I want to cover tonight. And as we're kind of getting people on, if you haven't followed, if you haven't been up to speed on things, right now our country is going through some economic trouble, right? And by that I mean we just had our stock market crash. The Dow went from like 30,000 down to like 19,000, 18,000. It just came up a few thousand. Again, that doesn't mean much to you and I, but you know that's a sign that things really are kind of in a shaky position. We have this virus thing happening, unemployment is spiking, and as of today, we just learned that the federal government is announcing a $2 trillion bailout. Okay, a $2 trillion bailout. Now that's kind of what I want to go over here. Now tonight I'm going to hit some cool stuff. I'm going to hit some interesting stuff that when I learned it, I actually gave up my business. Okay, so I used to be a financial advisor. I used to sell mutual funds. I used to sell stocks, bonds, portfolios that are managed for retirement accounts. I used to be a Wall Street guy. Okay, and what I realized when I learned some of the data that I'm going to share with you tonight, that stuff made me actually give that business away. Right, so I was making at that time about $200,000 a year. Some of you guys remember me back then. Jeremy Fetta actually sat in my office back in that day. I was a Dave Ramsey guy. Right, I would sit down from you. I would tell you, you know, let's max out your 401k and get the match. Let's do your Roth IRA. The market's down. It's on sale. Buy while it's low. Dollar cost average. It's going to ride out if you just wait. All of that stuff. All of the things that you see online today, I was a proponent of. Now, the data that I'm going to share with you tonight made me literally give that business away. I didn't sell it. I literally wanted nothing to do with it. I gave it up. We were making about 200 grand a year. I handed it over to a colleague, said, take over my book of business, service my clients. I don't want any part in this anymore, right? So I want to share that with you tonight, but I want to share with you the solutions. Okay, because I've kind of been experimenting as we're going through this whole bailout thing. I posted a few things the last couple of days on, you know, what this actually looks like from a taxation and inflation and freedom standpoint. And I got all the tinfoil hat people in my comments freaking out, like, oh, the Illuminati's coming to get us. It's the aliens. It's the, you know, all this crazy stuff. And so what I want to point out is the stuff I'm going to share with you tonight, although it's crazy and it's true, if I'm not succeeding financially, I'm screwed either way. So it doesn't help me to know any of the inside secrets if I'm not going to be successful with finances in the first place. This is not going to help a broke person. Basically is what I'm trying to say. I've got to look at how can I improve my finances regardless of who is doing this and why, right? So check this out. We have this bailout happening. And really kind of what took place in the last several weeks here is the stock market crashed. People have been quarantined. Small businesses can't operate. People are staying home. And so we have a combination of a few different things that a lot of us are misidentifying as one event. And they're actually separate things that have been happening in the economy. And so I want to break down what those things are and really give you some clarity. So I want to whiteboard this a little bit today. Let me go ahead and pull this up so I can share my whiteboard with you guys. The first thing that I want to share with you here, if you guys are on Instagram, you can't see the whiteboard, but I'm going to explain this to you verbally. So the first thing that we had happen was we had the CV. We're just going to call it the CV because I don't want my video to get blocked or shut down. We had the CV happen, right? Everyone knows what the CV is. Wasn't a big deal. It was over in China, all that stuff. And now all of a sudden it's in the US and people start panicking, right? So there's already some general fear. When people are afraid, they restrict. Okay, they actually they pull back, they stop spending. So fear equals restriction. So we had some restriction happening, all right? And that's still happening right now. So this restriction already causes the economy to slow down a little bit, right? Money or the economy only grows at the rate money transfers. So the faster we're transacting, the better off it seems like things are, right? These rapid transactions, when people are spending, everything seems good and great. And then as soon as fear happens, we slow down, those transactions stop, the economy starts to go slower, and we start realizing that we don't have the momentum anymore that we used to think we had, right? So we had that happen first. The next thing that happened here was the market crash. We're going to call it a dip because it wasn't initially a crash, it was a dip, right? So the market dipped. Now I'm going to reposition my Instagram so I have a better view of the screen here. So we had the market dip, right? Hang on just a second, Instagram. Boom, there you guys go. So we had the market dip. Now when the market dipped, that caused more fear, right? So that caused some fear, some uncertainty, some doubt. We already had the virus happening. Now, the reality behind the market dip that most people don't realize, I'm not going to talk about the virus because I don't think that actually affects most of us economically. I think that's more up here. But from an economic standpoint, I just talked to a client the other day, they lost 100 grand in the stock market, right? In however many months this virus will be done, they won't have their 100 grand back. So that's big. So I want to really talk about that first. So when we look at the market dip, let me go back to my controls here. This market dip was caused by a couple of things. So prior to this dip happening, corporations were doing what's called stock buybacks. And if you follow me on Facebook, you saw that in January and December, I was posting about stock buybacks. If you followed me even sooner than that, you would have seen back in September, I was posting about stock buybacks. A stock buyback is when a publicly traded corporation buys their own shares of stock, right? Why would they do that? Think about a stock. And if you're not educated on stock, that's okay. You don't need to be. They're not that important in the grand scheme of your life. A lot of people will try and convince you they are. But a stock buyback basically is a company, starts trading its stock on the exchange. Investors can buy shares, and they have to pay out those investors typically on the gain of the share. So the investor can buy it at one price and sell it at another price. And then sometimes the company pays out what's called a dividend. Right? A dividend means that their profitability was higher than expected and they return that back to their shareholders, basically as a reward for investing. So if a dividend, check this out, if a dividend is, let's say you have like an AT&T stock. Let's say a dividend is 4 to 6% that I'm earning on my stock. That's a cost. As a company, that's a cost. I'm paying out 4 to 6%, right? So what if I didn't have to pay 4 to 6%? What if I could pay 1 to 3% instead? Right? Like think with your business hat on. Would you rather pay 4 to 6% or would you rather pay 1 to 3? I would rather pay 1 to 3. Okay. So companies were thinking this way. The 4 to 6 was the dividend that they were obligated. I shouldn't say obligated, but that they were paying and that the shareholders expected. The 1 to 3 is the interest rate they could pay on a loan if they borrowed money. Okay. I want to connect the dots. They were paying 4 to 6. They saw an opportunity to pay 1 to 3% instead. They borrowed money, and they use that to go buy out these stocks. That way they don't have to pay that 4 to 6. They can keep it. They can pocket it. They get to keep the cash. They pay less in interest. Seems like a smart business decision. Now the problem is that the stock market is supply and demand. Okay, supply and demand. And this is a little bit of a lesson in economics, meaning that the more demand there is and the smaller the supply there is, the higher the prices will be. The less demand there is, the greater the supply there is, the lower the prices are going to be. Just like with real estate, right? The more houses that are on the market with the less buyers, you're going to have prices drop. If there's less supply and a lot of buyers, the prices are going to go up. So what happens is these companies buy their own shares. They're buying, and that is lessening the supply and increasing the demand, and therefore artificially inflating their share prices. So think about if I start buying all of my stock, and I'm doing it through debt, so I could borrow as much as I need to, right? And I start buying and buying. Over the last, I think last 10 years, companies have put $5 trillion into stock buybacks. That basically artificially inflates the share price, meaning that the share of my stock is now worth more than it actually is, right? And so what happened is in up until about December, companies were aggressively doing this. In January, they sold. right? They ripped the bottom out. They sold at a profit. They said, okay, our share prices are capitalized. They're really high. We see this thing starting to teeter. Let's sell at a profit and go dump this on the taxpayer. So that's what they did. That's what caused the market crash. If you didn't know that, it's because companies borrowed money to buy their own shares of stock to inflate the price, and then it's called a pump and dump. They pumped the price up, then they sold it, and then they dumped the shit on the consumer. They literally took a crap on our heads. Like in our retirement accounts, this is the reason why they went down, right? Now, these same companies that sold all their stock for a profit are now saying that they need a bailout, right? And the reason why is because of the loss of jobs, right? They are not loss of jobs, the limited working capacity right now. You have airlines that they're not booking flights with people staying home. They're not traveling as much. So these larger companies, the airlines are a big culprit behind this on this last cycle. They bought a bunch of their stock, they pumped up the value, they sold, they dumped it on the consumer before things went downhill. And now they can't pay their bills because they have all of this stuff apparently that prevents them from booking their flights with the virus, and nobody wants to travel. And now they're basically saying, hey, we need a bailout. Okay, so check this out. The government is saying, all right, we're going to bail you guys out. We're going to give you money, right? The consumer, same thing. The government's saying, hey, we're going to bail the consumer out, meaning you and I, right? Everyone's hearing about getting a $1,200 check. Businesses are right now getting small business association loans. This is bailout money, okay? And the problem with bailout money is that most people aren't aware of where it comes from, and most people aren't aware about what it does in the future, what it does. Okay, so what I want to do really quick is I'm going to share an email that I got today. Let me go ahead and share this email that I got today, because I want to show you guys what this bailout money actually looks like and where it actually comes from. Now, this is just relating to the small business loans. This is not about the $1,200 check that all of us Americans are going to get. And I'm going to talk about that in a second, but I want to talk about the small business loans, because this is literally billions of dollars that they're giving out to businesses right now. So this is basically the economic injury disaster loan. That's what the SBA and that's what the government's releasing right now because of the coronavirus. So a couple things I want to point out. This loan is from the Department of Treasury, not a bank. Right, normally when I get a loan, I get a car, I get a mortgage, I go to a bank and I borrow money. This loan is not from a bank. This is from the Department of Treasury, the United States Treasury. Okay, so check this out. I want to show you how this works. We'll pull up the whiteboard again so you can really understand the importance of this. Let's say that I'm over here, this is me, and I'm getting a loan, right? So Jerry is getting a loan, and Jerry gets that loan from the Treasury. Okay, so the Treasury is giving money to me. That's what we're looking at right now. Now, here's the thing. The Treasury basically is the collection agency for the government. Like we have the IRS collecting taxpayer money. It goes to the Treasury. That's where our disbursements and income all get handled, just like in a company. But the problem is that the United States government only has one revenue source, right? So there's only one way that they could get this money through revenue, and that's through taxation. Meaning that they're going to steal from other people to give it to this broke guy that couldn't run his business, right? And so the Treasury is going to get this from taxation, or if they don't, we've got to look at, well, where else could they get it from? And the reason why we've got to look at where else could they get it from is right now our country operates at what's called a budget deficit, meaning that they currently spend more than they make. That's a problem. I've been there before in my life. I've spent more than I made. Let's see, anyone that's spent more money than they made before. I want to see some likes and hearts. Okay, I've done it before. It wasn't smart. I apologize for doing it to my finances, but it was something that I did. I know what it's like to spend more than I make, right? And so the Treasury currently does that on a regular basis. They came up with a special name to make it sound more important than it is, and they call it deficit spending. Okay, basically meaning that they spend more money than what actually comes in. Right? So we can't really cover these loans through taxation because we're already behind the 8 ball. We don't have surpluses. Our government doesn't have a budget surplus. So they can't loan their own money to someone. So where do they get the money from? Right? They have to borrow it. That's right, guys. The US Treasury is borrowing money to loan it to you. All right? Now, why would they do that? Think about why would they do that? And I want you to also think about where did that money come from? Where are they borrowing it from? Okay, if you don't know the answers to this, it's okay. I didn't know this until about 2015 or so when I started really learning about this and studying it. When I learned this, it blew my mind. Okay, so there's an organization called the Federal Reserve Bank. The Federal Reserve Bank. Now, this organization started in 1913. Coincidentally, that's the same year the IRS started. Hint, hint. And so the bank, and I don't even know if we can call it that because it's not a bank. So here's the ironic thing. Federal Reserve Bank, it's not federal, meaning it's not actually part of the United States government. It's a private corporation. Okay, it's not reserves. There's literally no money there. And it's not a bank. It's called a Federal Reserve Bank, but it's not federal, it's not a reserve, and it's not a bank. You cannot go make deposits and withdrawals there. It's not a bank. Okay, what the Federal Reserve does is they loan money to the Treasury. Who's heard of a Treasury bill or a T-bill? Okay, we've heard of that before. Like treasuries in the investing world is supposed to be the safety and security that we have to invest in the US Treasury. What a Treasury debt is the United States government borrowing money from the Federal Reserve Bank and then promising to pay. And then the Federal Reserve Bank hawks those and sells them to consumers, right? And that's neither here nor there. But what I want to show you tonight is the money that I'm getting for my SBA loan came from the Treasury. The money from the Treasury did not come from taxation. We're broke. We don't have cash flow. It came from a loan. The loan came from the Federal Reserve Bank. Okay, the Federal Reserve Bank is a private corporation that basically prints money out of thin air. The money they have does not exist. It's not backed by anything. It's not gold. It's basically nothing. They loan nothing, just digits on a screen to the Treasury at an interest rate. And then basically the Treasury loans it to me as an SBA loan, a small business loan. Over the next 30 years, I'll pay 3.75% on this money that came out of nowhere. Now, I'm super excited because I'm like, man, I just got this money and I can do all this stuff in my business and I can expand. Little do I know the actual cycle that's happening here. So the Federal Reserve Bank has owners. This gets worse. It has owners. The owners make a 6% dividend on the profits of the Federal Reserve Bank. Okay, now I said profits because that's what it is. The Federal Reserve Bank makes profits. Where do they make their profits from? Well, they loaned money to the government. The government has to pay interest on these loans. The interest on these loans goes to the Federal Reserve Bank, and basically that's how they make their profits. They make it off of the interest paid on the debt that the United States government owes to the Federal Reserve Bank. That's it. Now, here's the even worse part. Interest paid by the federal government. Let's look at that really quick. How in the world does the federal government actually pay interest? Well, taxation. They only have one revenue source. If they have to meet the interest on their bills, they can't do it through, they don't have a product, they don't have a service, they don't have a subscription program, they have taxation. So the more money they borrow, the more interest they pay, the more they have to tax us. Okay, now really quickly, I'm gonna be right back, guys. So I wanna show you guys something. I'm gonna be right back. Instagram, I'm gonna bring you guys over with me. So basically, I've got some stuff that I wanna bring into here. I was saving this, but I wanna go through it with you anyways. All right, so I told you I was gonna blow your mind tonight. Now again, this is about to get crazy, and I wanna just stress that if I am not doing the right things with my finances, none of this stuff matters, right? I can go full on into full conspiracy theory mode right now and be like, man, the Federal Reserve is evil and the IRS is evil. If I'm not earning more than I make, saving money and investing it and following the triangle of wealth, it helps me zero to know this information because I'm not going to do anything about it. I don't have the means to because I'm not actually trying with my finances. So check this out. This is something I printed out a few months back, and I've been saving it and studying it, and it really was kind of condemning when I read it as to what's actually going on in our nation right now. So this is a report from 1985 called the Grace Commission. It's actually from Washington, D.C. I'll show you guys the seal. Right? This is an official report. This is called the Grace Report. All right. Inside the Grace Report, they did an investigation on waste in the federal government. It's a 2-volume summary report. And in this report, let me go ahead and find the part here. Inside this report, it's actually admitted that none of the revenue collected by the IRS goes to tax or goes to pay for public works. It basically all goes to pay for the Federal Reserve debt payments. Yeah, so here it is. So basically in this report, it's Reagan. This is back when Reagan was president, okay? So in this report, he states that the revenue being collected does not go to public works, it goes to the interest on the Federal Reserve debt. It says, because we are starting from a deficit of 195 billion, every dollar we stop spending now is a dollar that the government does not have to borrow. Guys, this was in 1985. It's freaking 2020 and we're still operating on the same system. So I'm gonna read that again to you. This report says that because we are starting from a deficit of $195 billion, every dollar we stop spending is a dollar that the government does not have to borrow. That's insane. Guys, this is literally, like, I can send you a copy of this if you ask me for it. It's called the Grace Report. This is literally from Ronald Reagan. This is literally from our government, basically saying that we have a deficit, and because of that deficit, we borrow money, okay? Let me find the part specifically that I want to point out here. I should have highlighted this for you guys. System failures, program waste, monitoring. Oh, here we go. So this line right here, it says the commission found that 1/3 of all income taxes is consumed by waste and inefficiency. 1/3 of all income taxes, okay, is consumed by waste and inefficiency. 1/3 is not collected due to the underground economy, and 100% of all income taxes are absorbed by interest plus government contributions to transfer payments. Interest, meaning the interest paid on the debt that we borrow from the Federal Reserve Bank to do these bailouts. Okay, so we're literally seeing here that the money that the government collects from taxes basically goes to interest on this debt. So what that would go to say is that the more we borrow, the more we're going to have to pay in interest, the more we're going to have to pay in taxes. Okay, so this idea of like bailout money being this exciting thing, I really want to break this down so we all understand it's not a good thing. Okay, it's not a good thing. For the long-term future of the country, it means that we all pay higher taxes. Now, I haven't even jumped into what this does to our money when we have the Federal Reserve banks, you know, basically sending us $2 trillion that came out of nowhere. Yeah, this is an insane document. This is another part here. It says, importantly, any meaningful increases in taxes from personal income would have to come from the lower and middle income families, as 90% of all personal taxable income is generated below the taxable income level of 35,000. So we hear on the news, the top 1%, you know, they're evil, they need to be taxed higher. This is saying, no, 90% of the income tax comes from you and I, the average guy, right? So this is really pointing out like the problem here, and I don't want to get too much into this document. The problem there is basically that we have the Federal Reserve Bank loaning us this money for bailouts, and that triggers the interest. The interest gets paid by the Treasury to the Federal Reserve Bank. The interest is covered by taxation, and therefore the more we borrow from the Federal Reserve Bank, the more we will pay in taxes. That's the reality of the situation. So what I want to show you next is, again, we have the Federal Reserve Bank loaning the money out to the Treasury, and what that actually does. Okay, so who's heard of inflation? We've all heard of inflation, right? So inflation, when I was a kid, I thought inflation meant things got more expensive. Like I thought about like when you inflate a basketball, you pump it up with air and it gets fuller and fuller, right? But the reality is what happens is when we borrow money from the Federal Reserve Bank, this money doesn't actually exist. It's coming out of thin air, right? Back in the day, we had the dollar and it was backed by gold. It's no longer backed by gold, right? And because it's no longer backed by gold, we don't have any sort of actual value behind it. So when we create this fake money, it devalues our currency. And when I say fake money, I mean $2 trillion that we borrow from the Federal Reserve Bank that has literally no backing. Think about like a cup of coffee. Who's ever had weak coffee before? Right? If you've had weak coffee before, basically it means that coffee got watered down. It doesn't taste good anymore. It's bitter, it's sour. Nobody wants to drink it. The same thing happens with dollars, right? So the more I push out this fake currency, this $2 trillion bailout money, it weakens the dollar. The dollar buys less and less. That means it takes more and more dollars to buy the same things. Think about that. It takes more and more dollars to buy the same things. Who remembers with their parents when they could buy a house for $5,000? Right? I talked to a client today. He just closed on his first house. He spent $400,000 on it. Right? Vehicles, used to buy a car for $1,000. Now we're lucky if we can get a car for maybe 20, 30 grand, like for a base model new one, right? So this idea of inflation, it's not that things are worth more and they're more valuable. It's that the dollar is worth less and it takes more and more of those dollars to buy the same things. Now this shows up in homes. This shows up in the price of gas. This shows up in the price of groceries. This shows up in prices on milk, housing, like anything you can think of. This shows up in the stock market. Okay, so a lot of us that are right now like, oh, the market's killing it, it's ripping, go buy stocks. You know, it's been up the last 10 years. A share is measured in dollars, right? So price per share is measured in dollars. So if the dollar's going down in value, naturally it's going to take more dollars to buy the same share. Naturally, that share price is going to look like it is worth more because it's saying it costs more dollars to buy it. Doesn't actually mean it's more valuable. The earnings aren't there. The profitability isn't there. Like if it was, why would they be buying their own shares back? Why would they be asking for bailout money right now? Right? And so we have this devaluation, which then causes an inflation in the currency, meaning we have to spend more money to buy the same things. Now, the crazy thing about this is it's not going to happen tomorrow. It's going to happen gradually over time. Bit by bit, it'll happen. Until we basically look back and say, man, I remember when you could buy a house for only 300 grand. Or man, I remember when a car only cost 30K. So this whole thing, like with the bailout money, is basically we're increasing our taxes, guaranteed, because the money came from the Federal Reserve Bank. It's money that the Treasury has to pay interest on, and they don't have revenue except for taxing you and I. So cool, I got 10 grand in my business from the SBA. Also, my taxes went up. Guaranteed. Okay. Also, my currency is devalued, meaning that I have to work harder to make the same money, which buys less, and then more of that money will go to taxes. There's no winning with this, guys. Right? So I had someone text me yesterday, and they're like, hey, are you going to be taking an SBA loan? And I thought it over, and after doing some research, I was like, no, I'm not going to be taking an SBA loan. Okay, I'm not going to sit there and bleed out my country, like my fellow people that live here with me, over money that I could go make in my business without having to borrow it from the Treasury. And so this idea of the bailout money, like I really want it to be a sobering thing. If you need it to stay afloat, great. If you don't, you shouldn't be grabbing it. Okay, because what happens is because you owe, like, and I'm going to go more into the actual loan specifics, because you owe, you're now indebted. Okay, that Bible verse, the borrower is slave to the lender. And I'm not about to get Dave Ramsey on you guys, but it is true. Until you pay that back, you'll have to keep paying it back. Right? So check this out. This is the SBA loans again. I'm going to flip this around for Instagram. All right, so check this out, Instagram and Facebook. Intended uses to provide working capital for impacted businesses, okay, or repayment of existing loans. But the SBA loan is not to refinance debt or make purchases. This is not money that you're legally supposed to be using to refinance debt. This is not money that you're legally supposed to be using for investing, okay? They're gonna look at your ability to repay the loan over a 30-year period, assess your needs. First year, there's no payments. All this stuff sounds great, right? Then here's where it gets scary. If the loan is under 25K, no collateral is needed. If the loan is over $25,000, they will take position on your business assets. Guys, that is scary. That's the United States government having a first lien position on your business. This is literally like communism. Okay, over $200,000 loan, they will look for a lien on your personal assets, meaning that they'll try and go for your house or your vehicle or your properties or your lands. At what cost are we willing to take these loans? Like this, I understand if you're like, hey, I can't make payroll next week, but I'm saying this is scary. This is the federal government saying we will loan you money that's not even ours, and the consequences you have to put up your house and your business as collateral, right? That's freaking scary. So this is the basics of the loan. The other thing that I wanted to point out here, this is one of the major selling points that people are getting on this SBA thing, is there's a $10,000 grant, basically. Where's that line? Let me find it real quick. This is and if you guys want this was an email that was sent to me today. And basically this is the breakdown of how these loans work. And as I'm reading through it more and more, this is not something that I would take for my business. This is not something that I would actually recommend my client to take for his business. I had one today that I was actually just talking to till I read this. I'm gonna send him an email and say, hey, this is probably not a good thing for you to be thinking about right now. Oh, here we go. So this establishes an emergency grant. This is freaking crazy. Establishes an emergency grant to allow an eligible entity that has applied for the loan to request an advance on that loan of up to $10,000, which the SBA must distribute within 3 days. If the applicant is denied, they do not have to repay the advance. That's literally $10,000 of free money. Now, if I'm a freaking brown noser, freeloader, I might be excited about that and be like, yeah, I can get 10 grand. It doesn't cost me anything. But what did we just talk about? We just talked about that $10,000 came from the Treasury. Okay, and the Treasury got that from the Federal Reserve Bank. So it's not free $10,000. If I take that $10,000, I'm putting the nail in the coffin on all of my fellow citizens paying more taxes. I'm putting the nail in the coffin on all of us having our currency devalued, having to work harder and harder and harder for the same money. I'm not okay with that. Okay, so like the basis of this is just totally off, right? The other thing that was released here recently, let me pull up my whiteboard again. The other thing that was released here recently is the 401k bailout, meaning that they're allowing people to bail money out of the 401k, right? So they're saying, hey, if you have a 401k, you can take $100,000 out of it, penalty free. You'll still pay taxes, right? So you will still pay taxes, and you have to repay it within 3 years. Okay, what many people don't know is they can actually take a 401k loan right now for $50,000, and they don't pay any taxes on it, and they can repay it in 5 years. So why would I do a 3-year loan that's taxable when I could do a 5-year loan that's not taxable? You guys see this? The government is looking for money right now. They want you to take the 100,000 out because they want the tax dollars. If you watch Congress at all in the last 5-10 years, they've been trying to get at retirement plans for quite some time. All of this tax deferred money, they were thinking about getting rid of that and making it just Roth. That way they could get a one-time taxation on all the account balances. They're looking for money, right? Why would they loan you money at 3.75%? They want your income for the next 30 years because taxes aren't enough. All of this stuff is adding up to more of my income going to a financial institution, more of my income going towards the government, more of my income being taken from me, building their prosperity instead of mine. Okay, so what do I do instead? Like, how do I avoid all this? The first thing here is I need to go earn income. Right, I need to go earn income. Now, those of us, I'm gonna flip Instagram back around. Those of us that are at home right now, and maybe we're barbers, or maybe we're auto mechanics, or maybe we run a store or retail location where we have to have people come in to sell stuff. I need to go increase my knowledge first. I need to learn. I need to go learn a new skill set right now. Okay, we might be bailed up. We might be stuck in our homes for another month. Okay, in a month, you could learn how to do e-commerce sales. In a month, you could join a multi-level marketing deal and make all your appointments and sales on Zoom. In a month, you could join financial services and figure this out as well. In a month, you could learn day trading. You could learn Forex. You have a month of full-time education to learn something that will give you the ability to earn income right now. Okay, that's the first thing you need to be doing. It's not bailout money. It's not go get debt because it's cheap, because we just looked at it's not cheap. That's socialism. They're giving us low interest rates because they know that everyone's going to pay it off in future taxes. It's not just free money. So I need to earn. Number two, I need to then economize. Meaning I need to get rid of my crap. Okay, if I'm living in a house that's too big right now and I don't need that payment, I'm probably going to get rid of it. If I have two vehicles and only need one, I'm probably going to ditch the second one. If I have a bunch of, Alaskans, if I have a bunch of snow machines that I'm not going to ride the entire summer that I could rent next winter from someone else, I'm going to probably sell those right now. I'm going to economize and get rid of my waste. Okay, so I need to earn first and then I need to economize. Now, I also need to make sure that I don't do anything right now that's going to screw me up in the future. So this is where I'm avoiding bailout money. Avoid bailouts, avoid debt right now. Do not take on a bunch of debt that is basically not going to help you. I have one or two clients that are looking at this bailout thing and they're like, hey, I could actually invest that money. But the rest of the people I see, they're probably going to get their $10,000. They're probably going to go buy a bunch of crap in their business that doesn't produce revenue. And they're not going to get anything out of this money except the payment for the next 30 years. Avoid bailouts. Don't take the money if you don't absolutely need it. If you can't use it in your business to save yourself right now, or invest it, we just looked at, you can't invest it. I mean, technically you could, but it's illegal. You can't use it for purchases. You can't use it to refinance out debt. So sure, you could borrow it and then go invest it and hope you don't get caught. But at the end of the day, if they do catch you, they're probably going to seize your assets. They're going to tell you, hey, you need to pay us back accelerated, or we're going to take your business, or we're going to take your house, or whatever your collateral was. That's the insanity behind this. So avoid bailouts. Now, all of us are probably going to get some sort of a check anyways. I remember back in 2008 when this happened, they sent us, $1,200 checks or $1,000 checks. Everyone got stimulus checks. And I remember getting one and I was in high school. I didn't even have a job. Okay, but I got a stimulus check. Okay, I took the check, I blew it. I spent it on stuff that wasn't going to help me build wealth. I spent it on stuff that I can't even remember what it is today. So if you do get $1,200 from the government, if you do get $2,400 from the government, or you do get $3,600 from the government, basically that's something where if I get it, I'm going to go ahead and stick that towards debt pay down. I'm going to stick that towards investing. I'm going to stick that towards something that actually builds my future instead of spending that money. Okay, if I could avoid even getting the check, I would. I live in Alaska. I don't apply for the PFD. If you don't know what that is, every year we get a permanent fund dividend. They pay us basically $1,200 to live in the state. I haven't applied for one in like 4 years because it's government money. I don't need it. I don't want to be that guy that accepts government money when I don't need it, right? Because it basically weakens me. I become more and more dependent. I become less and less responsible. And I start allowing them to be cause over me. I'm not interested in that. That's not how wealth is built, right? So I'm going to earn income right now. I'm going to economize and get rid of my non-productive expenses, my non-productive things that I own. I'm going to avoid bailouts at any cost possible if I can. And I'm going to continue producing and learning. Okay, and at the end of the day, the last thing I'm going to look at is I'm going to invest in real assets. Real assets, meaning things that will not go down when this thing finally does crash. We had a little taste of it this past month. A little taste of it just with the stock market dipping. Okay, and we didn't fix it. Okay, we still didn't fix the reason why the stock market crashed. We just printed out more money and we basically bailed it out, and it's going up a little bit right now. And what that means is that the assets are even more inflated and that we have even less real value and things are even more unstable, and eventually it will crash. And when it does crash, I want to own things that don't. Okay, I want to own real assets. I want to own real estate. I want to own businesses. I want to have secured debt where other people are paying me. I want to have gold and silver. I want to have life insurance. I want to have things that have nothing to do with the economy and the stock market. Because when this thing does crash, there's only two ways it goes. It can go to what's called hyperinflation, meaning that we printed so much money that we literally have to get like $1 million bills, and homes cost, $3 million and it's, 10 grand a month to buy groceries. That's hyperinflation. Okay, when countries hit hyperinflation, they go under. Okay, the thing that we're doing with our currency right now, and I want to make sure this is understood, Every civilization in history has done this, and every single one of them failed. We're not different and we're not special. This is not going to be like we're the exception. We're doing the same thing every civilization in history has done, and all of them failed by doing this. We're doing the same thing right now. So when it fails, the stock market won't exist. When it fails, the bond market won't exist. When it fails, all this stuff that we're so putting our attention on won't exist. The real asset will. Okay, my real estate will. My gold and silver will. My contracts will. But that little invisible share that I own in a company that says that they're going to pay me if it goes up in value, that's not going to be worth anything at that point. Okay, so I want to avoid investing in the markets right now. I want to make sure that I'm really, again, earning income. I'm economizing, I'm avoiding bailout money, I'm stacking cash, I'm buying real assets, I'm deleveraging my consumer debt. If I have a bunch of debt and recurring payments, I want to get rid of those at this period. With cash, I'm not going to borrow money from the IRS, from the Treasury, from the Federal Reserve Bank to pay for that stuff. I'm going to do it with cash. I'm going to do it with my own money. I'm going to do it with my sacred account. Okay, so as I'm wrapping this up, I'm going to go ahead and start ending things here for today. A few things that I'm recommending to my clients right now on where they can put money. The first one is life insurance. Okay, we've heard me address this over and over and over, the sacred account. The sacred account literally made it through the last 151 years straight, paying a dividend every single year. This thing does not lose money. Not a single one of my clients that has a sacred account lost money. Okay? The other place that I'm looking at, gold and silver. Okay, the more that this currency gets devalued, the US dollar gets devalued, I want to have gold and silver. Okay, that's insurance against what's happening today. That's insurance against devaluation of currency. Okay, I also want to own real estate or real estate backed assets. Okay, this is again like a place to live. It's always going to be a necessity. Okay, I also want to own things that aren't correlated with the market, like life settlements. These are great to be in right now. Did you know in 2008, life settlements still made like 12 to 15%? Most people don't even know that's a thing, a life settlement. It's an investment. You can put money into it. It makes 12 to 15% on average, doesn't go down, has no correlation with the market, and it actually beats the market in both good times and bad times. Okay, these are areas where I'm directing my clients to right now. My clients didn't lose anything. My clients actually made money last month. Right, and this is not to brag and to say if you didn't, that's shame on you. I'm saying that there are other options out there. Like I said, I used to sell mutual funds. I used to be the guy that peddles that stuff, and I used to be the number one proponent of it. I'm saying right now, I don't do that at all. I don't invest my own money there. I don't tell my clients to invest there, and that's not where I think anyone should be invested at this point. There are other alternatives to put your money into today. Now, a few things I'm going to give you just as tips and pointers. If you're watching this right now and you have an IRA or a 401k that's in the market, there are options that I can help you with for you to actually move that into something like life insurance, real estate, gold and silver, some of those other assets where you pay no taxes and no penalties. You don't have to be in the market right now. There's no reason. And you're like, yep, I want to invest here. This is the place to put money. That's one thing. But if you're just like I was, where I was like, hey, I don't know anything else is out there, there's other alternatives in place for places for you to put it. Okay, you can set up what's called a pension trust. Okay, a pension trust, you can literally buy a business inside of a pension trust with your retirement funds. I was talking to a client today. He's looking at doing a triple net lease for Dollar General. Gigantic corporation, probably going to do well during the recession. He's going to buy that, not the stock. He's going to lease a building to the store for Dollar General using his retirement funds. Okay, there's also what's called a checkbook IRA, meaning if I've got a Roth IRA, I can move my money into a checkbook IRA and I can go buy gold, I can buy silver, I can do private lending, I can do promissory notes. None of it has anything to do with the stock market. So guys, there's options. Again, like all the stuff we covered today, the Grace report, this is one that I didn't even dive into today, but I will maybe another time. All of this stuff is true. If you don't believe me, like DM me, I'll send you some data to show you where it actually says this is how stuff works in our country. All of it's true, 100%. But again, the bottom line is, what am I going to do about it? It doesn't matter who's doing it or why it's happening. At the end of the day, it's what am I going to do to change my picture and change the the scene for everyone else. That's what my company is about. That's why we started. That's why we're in business. That's our purpose and our mission. Okay. So if I learn about all of this stuff and I'm all pissed off about the IRS and the Federal Reserve Bank and the Treasury, and tomorrow I don't go earn more income, I'm literally a liability to myself. That's my mindset. How can I be that upset and then not change? Okay, so this isn't to get you riled up. This isn't to get all the conspiracy theorists on board in our tinfoil hats talking about how bad the government is. This is literally, this is happening. And in order to get it unhappening, I have to be succeeding financially to actually have the means to do something about it. Bottom line. And that doesn't mean that I take money from them. That doesn't mean that I let them bail me out. That doesn't mean that I'm down and out and I can't do anything. It means that I'm resilient. I have self-determinism. I'm responsible for my future. And I'm going to push during this time no matter what. And I encourage all of you guys to as well. Okay. So guys, really quick, I want to wrap this thing up. Let me see if there's any questions. If you do have questions, go ahead and drop those in the comments. Marcy Barker says, hi. Hey, Marcy, good to see you. Todd Regoli says, if the government is searching for money and looking for ways to receive tax money, are sacred accounts and life insurance policies at risk of losing their tax-free growth? What's protecting policies from having their cash value taxed without possible law change? So Todd, that's a really good question. So Todd is saying if the government is going after tax dollars today, life insurance, the sacred account, is a tax-free account. Will life insurance lose its tax benefit? Legally, it can. Okay, it's written into the law, but also functionally it can't. The reason why life insurance is tax-free is because I borrow against the account. A loan is not income. Income is income. I can't be taxed on a loan. So if I'm taking a loan against my account, the IRS can't tax that. If they could also tax my mortgage, because they could say, hey, that home appreciated, you borrowed money on it, that's income, we need to tax you. So literally they couldn't get away with taxing life insurance. Let me see if there's any other questions here. Yeah, that's the only question we have there. Let me see if there's anything on Facebook and Instagram. And if there is, we'll answer those. If there's not, we'll go ahead and wrap up here for tonight. By the way, I appreciate everyone being on here today. We have 60 comments. Wow. Let me see what we have here on Facebook. Let's see. I don't see any comments on Facebook. Oh, here we go. So comments on Facebook, we have Chad Jones, good to see you here. Carly Porter asks, does the government just print more? The government does just print more. Okay, the Federal Reserve Bank, they just print more money. And then they basically loan it to the Treasury, and that's where the interest comes from. Dan Wright says he's been to the Federal Reserve Bank in San Francisco and made it out alive. 6% is criminal. Carly asks, who owns the Federal Reserve Bank? That's a good question. Nobody actually knows the owners at this point. It's been passed around through so many corporations and stuff that it's something that you can't track it. Okay, they have member banks that apparently those are the owners. But you couldn't like point out like, oh, like Steve Jobs owns shares of Apple, or Jeff Bezos owns shares of Amazon. There's no way to see who actually owns the Federal Reserve Bank. Marcy says JP Morgan, Rothschilds, etc. That probably is it. James says private banks, countries, and we'll be on track as well. It was started about a century ago. My clients are so educated. I'm proud of you guys. Marcy, that was great. Good comment. And there is a clear bankruptcy as a nation and start over. So the whole bankruptcy thing, like we owe so many people so many money that if we declared bankruptcy, it would also start a war. It'd literally be like like we would have China and all these countries that we owe money to. We basically be giving them the middle finger and saying, hey, we can't afford to pay you guys. And you can think like China, they own a bunch of our debt. They're not going to be like, cool, right? They're going to be pissed if that happens. So I wish we could. James, thank you. I appreciate that. James says great content. Mario says we're over $23 trillion in debt. James says we need to ask questions and understand this. That's good. Questions are great. Marcy brings up a good point, guys. So with the bailout money, even the $1,200 check, there's a way where if you do it a certain, and I don't know enough details because I don't pay attention to handout money, but there's a way basically that if you don't file this little bailout money the correct way, you might have to pay it back. Right? So it's not even free money. There's a chance that I might have to pay it back. James wants to know, can we bankrupt the Federal Reserve Bank? We can't bankrupt them because they basically would bankrupt us. Bankrupting them would bankrupt us and our currency would crash. Congress is allowed to elect them out of office, like to vote them out. But Congress hasn't, and they won't because our politicians are all in bed with them. Marcy, I would hold off on the Subaru. I would still do our plan from last year. More dollars out there pushes value down. These are great comments, guys. Insane comments here on Facebook. I'll hit Instagram next. Yeah, if you guys have questions on this, email me for sure. Let me just see if there's anything else here on Facebook. Okay, Brian says, why would we buy gold and silver right now? So buying gold and silver right now basically is a insurance against currency devaluation. So it's a buy and hold investment. I'm not trading it. So I'm not going to buy it at 14 and hope it goes up to 16 and then sell it. I'm going to buy it at 14 and I'm going to hold on to it for a long time until it triples or it quadruples or it quintuples in value. And at that point, I'll probably sell it and borrow against it, but it's a very, very long-term hold. Jose says, will refinancing be an option soon? Jose, I'll text you about that. We should be pretty close. Now, let me just see on Instagram really quick if we have any questions. Let's see here, Instagram. Thank you guys for watching, by the way. I know it's Friday night and you could be watching Netflix or doing whatever right now. You're watching this instead. John says, what in the world is going on here? That's a good question, John. Lots and lots of people. 314 Keenan says, you look rich. Can I have some money? No, that's what the bailouts are for, bro. Let's see here. This is a good question. So this is from one of my followers here on Instagram. So he said, is it better to plan for retirement funding in a sacred account instead of putting it into an indexed annuity? All right, so this is maybe going to hurt some feelings. I would never, ever, 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 ever invest money into an annuity. Okay, in an annuity, what happens, and this is totally a bunny trail, but I did talk about this already today, so I want to go ahead and give you guys the data. An annuity is me giving money to an insurance company. I'm a consumer. I'm going to put money with an insurance company. They're going to give me participation in the stock market, quote unquote, limited, and they're going to give me no downside. Now, what they do is they buy bonds. With the money I gave them, they buy bonds, they take the interest from those bonds, and they go and they do day trading with that money. They'll go make 30 and 40%. They're going to pay me like maybe 5, 6, right? Now, once I get to retirement and I annuitize, I'm basically locking in the value of my fund, and they're going to pay me a guaranteed percentage of that for the rest of my life. There's a couple problems with that. Let's say I have $100,000 and they're going to guarantee me 7% payout for the rest of my life. That means that I'm going to make 7% of 100,000, which is $7 grand a year. Not a ton of money. Even worse, that $7 grand a year is not inflation adjusted. Even worse, they still have my 100,000. They get to keep investing it. Okay, an annuity is literally like a private loan to an insurance company. I used to do annuities. I used to be big on them. Right now, there's only one annuity that I'll do. It's a real estate annuity, and I only do it with accounts that are less than 50 grand in retirement, and they can't do anything else yet. And the rules are a little bit different with this one, but almost 99% of the time, an annuity is a bad deal for the client. Great deal for the insurance company, great deal for the agent. You'll see a ton of agencies pushing them because the agent makes 5 to 10% in commission, but it's not actually going to help anyone build wealth but the insurance company and the guy that sells it. So that's my little spiel on annuities. I won't get too deep into that just because that's something that's totally off topic, but I maybe can answer that question privately if you've got information you want to go over with me on that. Guys, I do want to go ahead and wrap up. Thank you for watching. This has been an awesome course. Again, like deep information, but I want to make sure that everyone received that from a position of personal responsibility And from the standpoint of all of this stuff doesn't matter, like I'm screwed either way if I'm not going to go build wealth. Okay, my choice is either poverty, like I'm going to quit and give up on money and go live in the bushes, or I'm going to go build wealth and find my way out of this thing. If I'm just going to hide my head under a rock and be this conspiracy theorist and be angry about the government and the Federal Reserve Bank, that doesn't help me at all. That doesn't help you at all. That's not a good attitude, and it's not going to be game changing for anybody. So guys, thank you for watching. Like, share, subscribe. Hope you have a great day. I'll talk to you guys next time. All right, Facebook, I'm gonna go ahead and wrap up. I'm off my Instagram here. I appreciate you all. Have a great night. Let me see if I can figure out how to turn this thing off. Boom, there we go. All right, guys, I'll talk to y'all later.